This is question number 6 of homework 1 for chapter 2, problem 2-16. You are given the following information for all harbor, marine, corporation sales equals $50,000. Costs equals $22,600. So here cost is just a very aggregate amount. So it might include cost of goods sold, selling general or administrative expenses, all sorts of costs. Addition to retained earnings is this amount. Dividend paid is this. So immediately, because we know that the net income can be the sum of addition to retained earnings and the dividend paid, so the net income can be calculated very easily by summing up these two amounts. Interest expense is $5,000. Tax rate is 35%. Calculate the depreciation expense. So here depreciation expense is separate from other costs. That's what that means, depreciation expense. So this question basically is examining, the focus here is examining our familiarity with the structure of an income statement and the basic items on income statement. So we know that an income statement, we start from sales, right? We start from sales. So let me enlarge this. And then next item is the cost of goods sold and all sorts of costs. So here I just wrote costs to be consistent with this question. And then finally we have the interest, right? After cost we have the depreciation. And then the EBIT is simply this is simply the sales minus costs minus depreciation. And then we have the interest expense. So, and then their difference becomes EBIT minus EBT, or taxable income, earnings before taxes. And then finally, taxes, based on the tax rate, are calculated. And finally, net income is the difference between EBT and the taxes. So that's the basic structure of an income statement. And finally, from net income, we can have dividend and addition to retained earnings. Net income is simply the dividend plus addition to retained earnings. So that's a basic structure of an income statement. So typically we go from the top, which is sales, to the bottom, which is typically net income. The bottom line of an income statement is net income. But here, actually, the question is asking us the depreciation, because in order to go from the top to the bottom, we need to know every input in between: cost, depreciation, interest, and taxes. But here, the depreciation is unknown. So that's why we cannot follow this general approach from starting from the top to the bottom. What we can do is to go backwards, because dividend is provided, right? Dividend addition to retained earnings is provided. So we can figure out net income immediately. So let me just write down the number so you know what I'm talking about. So this equals 7150, right? That's the addition on the dividend. Let me start from dividend just to be consistent with the order of the two variables. So dividend is 26,100, and then the addition to retained earnings is 7,450. So that's net income. And taxes, how can we figure out the taxes? Here we know the tax rate is 35%. Yes. And we know that the EBT, as we said, taxable income minus taxes equals net income. And net income here is known. This is known. And these two seems to be unknown, but they have a relationship. What's their relationship? Because taxes are based on tax rate and EBT. So taxes actually is equal to EBT, the taxable income, times 1 minus the tax rate. Oh, sorry, I have jumped a little bit. This is not correct. Taxes is just the tax rate times EBT, right? The taxable income times the tax rate, that's taxes. So now if you plug this equation, this expression for taxes into the above equation, you will have EBT minus EBT times tax rate equals net income, right? This is just which I also changed the order of the EBT and the tax rate. Yeah, now it's EBT times tax rate rather than tax rate times EBT. So then because you have both EBT for both terms, so you can combine them. So now this becomes EBT times 1 minus tax rate. This equals net income. Okay, so I think so far this makes sense. So from that, because tax rate is given 35% here. So 1 minus tax rate is simply the 65%, right? 1 minus 35 is 65%. So that means EBT times this is net income. So EBT can be solved out very easily by dividing net income by 65%. So that's what I'm doing here. So EBT, this is simply the net income divided by 1 minus the tax rate, right? Why don't I just input divided by 65%? Because I want to use the number here. So next time if this number change, I can just change the number tax rate here, and everything else will change automatically. So that's why I prefer to use 1 minus this, which is 65% here, rather than directly typing the 65%. So that's the EBT. And hence the taxes you can also figure out very easily, because EBT minus taxes is net income. Hence tax is simply EBT minus net income. So it's this one minus this. All right, that's the taxes. All right, so interest is given. So we back up. We have started from net income, and we got EBT, and then we go back for the interest. So interest is 5,000, that's given. So from interest, we can also back up the EBIT, which is because EBIT minus interest is EBT, hence EBIT is interest plus EBT. So now we cannot go any further because depreciation is the amount we need to get. But now we can go the common approach by starting from sales, and then these two approaches these two routes, they will converge. Yeah. And then that's where we can solve out this depreciation. So sales is provided to be 50,000. And costs are 22,600. So we know that EBIT is simply sales minus cost minus depreciation. So we know EBIT already, we know sales, we know cost, hence depreciation is simply the sales minus cost minus EBIT, right? If you're still wondering why, let me write down more steps in my notes. So because EBIT equals sales minus cost minus depreciation. So now if you move depreciation to the other side and EBIT to this side, then you have to change signs for both, right? So then you can express depreciation in terms of other inputs, which is sales minus cost minus EBIT. And so that's what we did. So we have figured out the final answer for this question, $74,100. So let me put that number and check my work. Good job.